Can I make installment payments on my tax bill? That's the question we're going to answer here today. My name's Darren T. Mish. They call me the IRS Solution Attorney. And the answer, like so many of these, is it really depends. If you owe, $8,000, most certainly you can enter into what's called an installment agreement with the IRS. Basically, the rule is here, we're going to divide the $8,000 by 72, and whatever that number equals, plus a little bit for penalties and interest, 10, 15, 25 bucks. Then that's going to be the amount of your installment payment. Now, if you owe more than $50,000, it gets more complicated, because if you owe more than $50,000, you're not entitled to what's called a streamlined installment agreement, and you have to do what I call a complex installment agreement. It's complex because the IRS is going to determine what their opinion of your reasonable or your monthly disposable income is, and then they're going to ask you, demand that really, that you pay that on a monthly basis. So your monthly disposable income is the difference between your gross income minus your business expenses, if that applies, and then minus your allowable expenses, and that equals the amount of your monthly disposable income. And there's really no way without looking at your particular financial situation to determine what your monthly disposable income is, because there's so many facts and circumstances that vary. Now, if you make $300,000 and you owe, $75,000, then the IRS is going to, they're going to demand that you pay your monthly disposable income. Well, how much is your monthly disposable income in that situation? It depends. It depends on where you live. It depends on how you spend your money. If you live in San Francisco or Manhattan, then your housing expenses, your allowable expenses, are much higher than if you live in Topeka, Kansas. It's just the fact of the matter. And so if you lived in Topeka, you'd have quite a lot of money left over, typically. And if you lived in San Francisco or Manhattan, maybe much less, because of housing costs alone, as well as transportation costs. So that's one of the things. There's also something called the 6-year rule now, and then basically that means that the IRS will deviate a little bit from that $50,000 if you will full pay the entire tax liability within the 6 years. That kind of depends on the facts and circumstances as well. It also depends on what your financials demonstrate. Now, there's a pilot program going on right now with appeals and IRS appeals, and they're agreeing to raise that $50,000 limit all the way up to as much as $100,000, and so we've had some success in those situations. So yes, you can have a payment plan for your tax liability. Will the payment plan be something that you're interested in? I don't know. We like to call those properly structured installment agreements. So if you think you need a payment plan, then you really should give us a call so that we can talk to you about a properly structured installment agreement. There's also a strategy where sometimes if you owe more than $50,000, it might make sense to pay the liability down to $50,000 so that you could enter into that streamlined installment agreement. Why, you ask? Well, one of the reasons could be, you think about it, if you owe less than $50,000, you don't have to provide them those detailed financials, so you don't have to go through all that headache of providing and documenting all your financials, all your your income and your expenses. But also, if your installment agreement fails, if it gets defaulted and you've provided them those detailed financials, what have you done? Well, you've provided them a roadmap to collection from you in the future, list of all your assets, all your income, everything. And so, unless you have to, you really don't want to do that. I would submit to you. So if you have questions about this or really anything else having to do with IRS problems, we invite you to visit our website at getirshelp.com.